morning, everyone, from wherever you are. Thank you for joining VALOORES Business Academy webinars, and most importantly, hope you are all safe with your families. I am Dana Shaheen. I bring around 20 years of professional experience in data science and modeling. I'll be moderating and balancing the message across our speakers, Ziad First and George Rahmi. George Rahmi is a cybersecurity expert. He is experienced in combating the finance of terrorism, cybersecurity and resilience, and mostly on biometric technology. Ziad First is VALOORES Group International Business Development Director, experienced in compliance and digital transformation. This webinar will be recorded and posted on VALOORES website for our valued guests who would want to revisit it going forward. I'm sure a lot of you have questions, so you can submit them during the talk by clicking on the Q&A button below, and I will relay them as much as we can to our panelists at the end of the webinar. Before tackling our agenda topics with you, a quick introduction on VALOORES, 30 years in 30 seconds. VALOORES was founded in Lille, northern France, and now operating all around the globe. We deliver to multiple lines of business, such as banking, insurance, retail and merchandising, supply chain optimization, digital government, multimedia communication, and healthcare. Back to our subject today is to show how regulators, governments, banks, insurance, and FinTechs are urgently teaming up as fraud, money laundering, and terrorist financing are surging in online banking and digital payments. Digital disruptions are forcing regulators and vulnerable financial institutions to anticipate KYC assurance, financial crime, and fraud risks. Corona pandemic has forced the adoption of new ways of working. Organizations must reimagine their work and the role of offices in creating safe, productive, and enjoyable jobs and lives for employees. COVID-19 accelerates the shift we have all been experiencing in payments. Remote customer onboarding has always been important. The digital identity is the key. Instead of the slow march to digital, we are seeing years of change in the last few months. It happens that COVID-19 increased demand for digital payment services to enable an economy in times of social distancing and beyond. KYC identification is at the heart of digital onboarding, driving accessibility to non-conventional biometric authentication schemes. Ziad, if we can have your point of view on this angle, please.
Thank you, Dana. Good morning, everyone. In recent years, electronic payments have been one of the fastest areas of growth in financial services. The crisis accelerated this growth. The technology exists. Consumer and merchant understanding and adoption, they have significantly increased. Financial institutions and the regulators need to respond to demand. People without accounts and online wallets are having to queue to receive welfare payments, putting them at greater risk of exposure to the virus. Implications will be significant for countries and payment firms that manage to respond effectively. Investing in tools is key so that all business and citizens, irrespective of finances and education, have access to electronic payments. That will help boost financial inclusion and lower costs and help economies get back on track more quickly as they seek to find a way back to growth and restore businesses and incomes in the wake of the crisis. I know my colleague has an interesting perspective on that too. Your thoughts, George?
Thank you, Ziad. Good morning, everyone. Moving away from cash affects unbanked citizens strangely. merchants without access to digital payments are losing out as remote buying increases. It's likely that the increase in online shopping will persist after the crisis, especially for retailers that make significant investment to retool their business model, where banks and payment operators continue to build omni-channel payment solutions while building infrastructure and ecosystems to operate actively. Businesses that provide viable options for integrated and contactless payment to both customers and merchants are likely to emerge from this crisis stronger. Demand from digital tools and technology that enable merchants and consumers to connect is also likely to continue to grow. The current crisis is revealing the fact that not everyone has the same level of access to new technologies and digital tools. And we will talk some more about that. To you, Dana.
Of course, George, COVID-19 changed and will continue to change life and business as we know it. Digital payment transformation has already started, but COVID-19 imposed an acceleration and an obligation to go way faster than the normal process. Why COVID-19 is accelerating digital payment transformation within the self-biometric accessibility and KYC identification? This is the question that we are going to deliver in the next 40 minutes. So Ziad, what are the main factors accelerating growth in the payments industry in such a changing market outlook?
To your point, Dana, the changing market outlook is indeed accelerating growth in the payment industry. Players in the payment market are mainly payment service providers, payment gateways, and card companies. However, banks are integral to the payment industry. The payment market is linked to the performance of the underlying economy and the economic structures. There is an expectation that the impact of COVID-19 on the payment sector will be lower revenues in the short term, which is in line with expectations on the GDP contraction. Main factors are, first, a reduction in economic activity across all major industries as a result of the lockdown. The level of impact may be determined by the severity of the lockdown and the transition to e-commerce, especially for services deemed to be essential. The economic impact is exacerbated by the fact that a number of countries are commodity exporters, and retailers, and retail transactions are expected to decline accordingly. A second avenue is a probable decline in cross-border transactions and remittances, with the closure of borders of countries disrupting travel and tourism and supply chain and forcing consumption of local goods. According to the World Bank, remittance flows are expected to fall in 2020. Most countries are also facing a serious shortfall in hard currency, which is putting pressure on local currencies and further depressing cross-border interactions. Third avenue to explore is a migration from cash transaction to cashless or digital transactions, influenced by physical distancing. Although the initial reflex of, at the beginning of the crisis was to withdraw cash, customers want to execute more electronic payments during the crisis. And that is with the increases in mobile money, mobile wallets, and bank-to-wallet transactions, an increase in account-to-account transfer and e-commerce sales, which is expected as major cities have been on lockdown. And that is through an increase in card transaction. And governments are raising the limit of electronic payments to encourage the exclusive use of digital payments. The fourth avenue to explore is an increase in the use of digital payment platform, and that is to disseminate stimulus funds to alleviate the economic impact of the COVID-19 crisis, while deepening financial inclusion outside the traditional bank establishment. The last avenue to explore is a decrease in the fees for payment services, and that is driven by payment players and government suppressing fees due to the COVID-19 crisis, which could drive up volumes of transactions and possibly increase the absolute size of the payment market. George, I'm sure you have an added value on that.
Yes, the pandemic has a dual impact on payment. In the intermediate term, the pandemic is accelerating the pace of businesses and consumers migrating to alternative payment methods, setting up the industry for increased growth coming out of the crisis. However, the significant drop in overall economic activities and the job losses points to an overall contraction in payment revenue. I hope it makes sense here.
It does, sir.
Indeed, George, new technologies facilitate the delivery of new payment products and access modes. They can also be applied to existing payment products and access channels in a variety of combinations, like the initiation of card payments via electronic wallets and leveraging contactless technologies. On the other hand, new products and access modes can simply use existing technologies in an optimized way. What are the fintech developments, in your opinion, the new technologies, the products and services and access modes that are of relevance to the payment aspects of financial inclusion? And what are the advances in technology considered to be relevant to payments and their application?
Okay. Well, APIs, big data analytics, biometric technologies, cloud computing, digital identification, and distributed ledger technologies have been identified by the World Bank's Committee on Payment and Market Infrastructure as the most relevant new technologies to facilitate the delivery of a new product and access mode. The concept of API is not new. What's new is their increased application to financial services in general and payment specifically. In payment and financial services, APIs underpin payment initiation services and the broader open banking models. API can also be used in digital KYC process and support checks on AML by enabling selected data to be shared among financial institutions while ensuring the privacy of data not needed for customer due diligence. Big data analytics technology enable analysis of significantly increased volume, variety, velocity, and validity of data. Big data analytics use adaptive intelligence, machine learning, and deep learning. Big data analytics in payments and financial services became essential to gain a better understanding of the end user, and that is by tracking the customer behavior. Now, for biometric technologies use an individual unique physiological and behavioral attribute to establish and authenticate his or her identity. Biometric attributes include elements related to the shape, features of the body, such as fingerprint, iris, or facial characteristics. In payment and other financial services, biometric technologies can be leveraged for remote onboarding of customers to overcome some of the challenges associated with PINs, password, or social security number. Cloud is the main enabling technology for banking as a service and payment as a service. It promotes greater security and enables innovation in payments and associated services. It reduces the need for large investment in IT and lowers market entry barriers for new providers. Now, digital ID is a set of electronically captured attributes that can uniquely identify an individual and is used for electronic transaction. A unique ID is critical in delivering government services with greater efficiency, particularly government-to-person payment, and in addressing financial access and the broader inclusion for individual and SMSEs. Finally, for blockchain or distributed ledger technology spans process and technologies that enable node in a network to propose, validate, and record state changes to a synchronized ledger that is distributed across the network node. In the context of payment, clearing, and settlement, DLT enables entities to carry out transaction without relying on a central authority to maintain a single golden copy of the ledger. Ziad, what do you think?
Well, as a matter of fact, George, it's worth noting that prominent examples of new products are instant payments, the central bank digital currencies, and stablecoins. New technologies not only offer new modes of accessing these new products by means of electronic wallets, open banking, and super apps, but also allowing payments to be initiated via traditional transaction accounts and payment instruments.
Certainly, Ziad, the COVID-19 pandemic has led to an increased demand for the use of digitally enabled services by individuals, businesses, and governments. Yet, the speed of cost and efficiency of these services largely depend on a country's digital infrastructure. So the social distancing requirements and the general restrictions on physical movement have created an unprecedented demand for digital payment systems. COVID-19 pandemic impacted payment services that are extensively used by individuals, businesses, and even governments. So drastic changes in work and consumption patterns will likely have a lasting impact on economic relationships and the use of digital financial services. In your opinion, what are the COVID-19 policy response on facilitating the use of such digital payments?
In fact, Dana, the use of digital payments has been on the rise in recent years. According to the World Bank Global FinTechs database, 70% of the adult population in countries like Russia, Malaysia, and China make or receive digital payments as they utilize their accounts. This is considered to be a high percentage. So the digital payments are already common, but COVID-19 is a significant driver, of even greater use of digital financial services. Regulatory authorities and central banks have been urged, have been urging consumers and businesses to use digital payments rather than cash to slow down the spread of the coronavirus. And they've advised commercial banks to limit the number of notes in circulation. So first, central banks are endorsing those avenues. Lowering or waiving the fees on instant payments. Lowering the fees paid by online merchants for the acceptance of cards to encourage the use of online purchases for essential goods and services. Then allowing banks an automatic extension for all bank cards approaching the expiration date through July 1st, 2020. And temporarily allowing banks during the quarantine period to open accounts remotely with simplified KYC rules, provided these accounts are opened by individuals to make or receive socially important payments, like social transfers, insurance reimbursements, mortgage payments, etc. Or SMEs to receive grants or loans to preserve jobs and ensure salary payments to employees. Another avenue is enhanced monitoring of increased cybersecurity risks and AML/CFT concerns due to the temporary relaxation of KYC requirements and increased transaction limits. Accelerated use of biometric data and digital IDs for individuals and SMEs is another avenue to facilitate remote customer identification and enrollment, which leads to a greater adoption of digital financial services. Another avenue is encourage the shift to digital payment and facilitate government-to-person payments through reduction or waiver of fees on some critical payment services, temporary increase in the limits to conducting various financial transactions, and promotion of the methods available for digital payments like channeling, government assistance, etc. And another point is leveraging digital identity systems to enhance crisis response and social support. The second, spectrum is the risks and the pitfalls to avoid, through the pandemic. And that is articulated through building strong institutional, legal, and technical safeguards for data protection, for privacy and security as digitalization accelerates, and make sure that the new limits for increased transaction are not creating AML CFT concerns. George, I know you have an interesting perspective on this.
Yes, yeah. Well, one point worth noting is that another drawback to avoid is being conscious of greater digital divides across society. As in many of the emerging market and developing economies, authorities have called for the greater use of digital payments, and access to this alternative is not universal. This means that some segment of the population might not have the means to use them, which could lead to an even greater digital divide as consequence.
Yes,
to you, Dana.
In line with what you are saying, George, critical enablers of payment systems and provision of payment services rotate around public and private sector commitments, legal and regulatory framework, and even financial and ICT infrastructures. So how can these foundations cater to fintech specific issues, like on one hand, seizing fintech's opportunities on efficiency, market contestability, user experience and ubiquity, and on the other, addressing the challenges of safety, market concentration, consumer protection and data privacy, and even the digital exclusion. So what is the role of the regulators and basic foundations in harnessing fintechs, George, by harnessing these opportunities while addressing the fintech challenges?
Okay. The three foundations and the critical enablers of payment systems and payment services are the public and the private sector commitment, the legal and regulatory framework, and the financial and ICT infrastructure. First, for public and private sector's commitment, fintech development call for increased international and the cross-sectoral coordination between authorities. Given that many technology-enabled products are offered across different jurisdictions, this could give rise to conflicts of law in terms of AML, data localization, data protection, and consumer protection requirements. A joint approach to fintech is key to making an impact. Fintech startups gain access to new markets and capital, whereas traditional providers develop innovative capabilities and competitive advantage over their peers. Regulators' initiatives such as sandboxes, innovation hubs, and innovation offices can foster the development of the fintech ecosystem. Instead, regulatory sandboxes can be used to evaluate regulation or policies that may delay beneficial new technologies or business models. Second, legal and regulatory framework. Adapted and new licensing frameworks enable new players to leverage technology-based business models in payment for innovative services. Fintech developments may challenge the applicability of current oversight concepts and standards. It's important to ensure that requirements do not discriminate against the use of a particular technology or disregard new technologies. Fintech developments should not compromise the effective protection of end-user funds. It's important to design risk management measures around that. Regulatory technologies can support authorities in fulfilling their supervisory and oversight tasks and market participants in meeting requirements more effectively. And that is through appropriate customer due diligence, AML compliance, and fraud detection. Finally, for financial and ICT infrastructure, restricting access of new entrants to financial and ICT infrastructure tends to constrain the supply of payment services to users, while many jurisdictions have introduced the possibility for authorized non-banks to offer payment services to end users. The access to payment infrastructures for clearing and settlement of transactions in many countries still requires a banking license. Fintech goes hand in hand with raising the bar for the cyber resilience of payment service providers and financial infrastructure. Interoperability and geographical coverage of financial infrastructure can benefit from fintech development. To maximize the benefits, a modular approach is allowing for infrastructure components to be flexibly stacked upon each other to build a digital infrastructure to which end users and service providers connect via API. What do you think, Ziad?
Well, to your point, George, it's worth noting that data frameworks need to ensure privacy in the fintech era. Increased availability and flow of personal data may be beneficial for financial inclusion, but poses new risks for individuals. Authorities are now updating existing national data frameworks to clarify the rights and obligations of key stakeholders. When it comes to oversight tasks, and as per the World Bank, the National Bank of Rwanda, for example, has introduced an electronic data warehouse to automate and streamline reporting that facilitates supervision. And there are lots of other similar examples, like the Central Bank of Nigeria, Brazil, and Nepal.
In fact, Ziad, many financial institutions are performing measured or unhurried due diligence on KYC and anti-money laundering solutions before the word COVID-19 was known. The disruptions caused by the coronavirus pandemic, however, have forced financial institutions to speed up plans to integrate better AML KYC solutions as they authenticate a slew of new accounts. Unless that process is happening in real time or even close to it, lenders remain vulnerable. So looking ahead, developments are speeding up the shift toward digital payments. This opens a divide in access to payments instruments, which could negatively impact unbanked and older consumers. The pandemic is amplifying calls to defend the role of cash, but also calls for central bank digital currencies. So Ziad, how are the technological innovation and payments are interconnected, and what opportunities and solutions does FinTech offer to underpin accessibility and usage of transaction accounts?
As you mentioned in your introduction, Dana, COVID-19 has sped up the shift we have all been experiencing in payments. Years of change in just a few months, as you articulated it. The once unstoppable payments, has shown it's not the payments market, has shown it's not immune to profound effects of the pandemic. COVID-19 increased reliance on remote banking, remote insurance, and payment apps. And this will become a routine even after restrictions on movement and public assembly are lifted, what we call the new normal. While established players such as Western Union and MoneyGram remain open for business, heading down to brick and mortar office has been significantly less attractive during lockdown. A demand for online banking portals, mobile banking apps, and other remote banking channels is on the rise. FinTech, RegTech, and supervisory tech solution providers like VALOORES accentuated solutions like remote bank account opening, financial crime compliance and AML-CFT monitoring, account maintenance, digital micro-lending services, consumer lending, life insurance onboarding, and the list is long. Levels of assurance and authentication are a major challenge, and hence a major opportunity for solution providers, especially for when it comes to infrastructure, digital ID, payment systems, and services. Life insurance, too, relies on the agent channel. So going paperless has long been a strategic priority in this segment. Today, the need is even greater to digitize this paper-dependent industry. Electronic signatures, in particular, are getting attention as an immediate enabler of digital transaction. And so is fraud detection and AML monitoring. When it comes to fraud in life insurance, Technology is the shield. Solution providers like VALOORES bring in the regulators' compliance measures and technology best practices that are transforming the industry. And that is around payment-based analytics, blockchain, Ethereum for payments, tiered electronic KYC, and the biometric-enabled digital ID, such as the fingerprint, and the new form of facial recognition, by the way, with the introduction of masks to our lifestyle. And it's called periocular recognition, which is, it's supposedly, to identify individuals by just their eyes and eyebrows. George, your thoughts on this call out?
Ziad, just one additional point is that biometric authentication solutions have become very important. Conventional authentication methods such as SMS-based two-factor authentication and knowledge-based authentication used to make it impossible to really know whether a person who logs in is actually the account holder. But biometrics, such as fingerprint and face recognition, on the other hand, ensure that only the authentic user is allowed to log into their account online.
So true, George, because tracking risk and monitoring compliance within an increasingly complex cybersecurity environment requires considerable time and resources, which are not commodity in this crisis. So digital measures are needed to maintain an effective financial crime compliance and risk management lifecycle. The absence of face-to-face contact in payment activities led to a high impact on regulations and compliance. Money laundering, terrorism financing, and fraud risks are surging in digital commerce and online banking because FinTech, RegTech, and supervisory tech, they are all in the race of accommodating to this impact. In your opinion, what is the spectrum of innovation around payments and what are the solutions around it?
Yes, COVID-19 pushed digital transformation to the front line. And so it did with contactless transactions, digital wallets, and fraud solutions. That constitute what Ziad previously called the new normal. The digital ID uniquely describes a person within a given context. It provides remote assurance and manages the life cycle of individual digital identity. A person's digital identity is composed of different attributes. Biographic data like name, age, gender, and address. Biometric data like fingerprints, iris, face recognition, or handprints. The credentials issued by service provider like unique ID number, authorized token, e-document, e-ID, mobile ID, and other attributes that are more broadly related to what the person does and what someone else knows about this individual. So ID and payment applications are combined in one form, such as a mobile phone and its associated SIM card, or even a smart card or other chip-based token. Blockchain and the digital identity are key, as federated authentication provides a solution to trust unknown identities across organizations or even borders. The immutable nature of the ledger ensures that dispute resolution is embedded and enforced by computer protocol. VALOORES secures blockchain payment compliance while aligning with the FATF guidance on the RBA and the AML framework. Ethereum is a decentralized platform that runs the smart contracts through applications that run exactly as programmed without any possibility of downtime, censorship, fraud, or third-party interference. The Ethereum wallet is a gateway to decentralized applications on Ethereum blockchain, allowing users to hold and secure Ether and other crypto assets built on Ethereum, as well as write, deploy, and use smart contracts. Master data management, also offered by VALOORES, empowers business processes with clean insight all over one universal foundation, on top of which all payment services are plugged in. On a daily basis, payment systems generate and store massive amounts of data. Accordingly, thousands of decisions are taken. Analytics engine can unveil implicit relationships, trends, patterns, and expectations that are hidden to human analysis and payment experts. Digital microlending running over online digital platform is adopted to originate loans directly to customers, mainly low-income individual and micro to small-sized businesses. This framework exponentially facilitates access to formal credit. Advanced financial crime and AML systems with advanced phonetic screening and real-time fraud detection monitoring are at the heart of digital payment transformation. Disruptions caused by the coronavirus pandemic introduced better AML solutions to authenticate the massive new account in real time. Ziad, what do you think?
Well, George, to the blockchain line item, blockchain is being trialed for various financial sector applications, including fund transfers, payment settlement, identity management, and regulatory oversight. And that is due to its decentralized and transparent nature. And there is through examples like supporting the development of self-sovereign identity, which they called the SSID, with an underlying legal ID, which is first validated by the issuing authority before being managed by an individual or entity on their own.
So as a result, regulators, banks, payment operators, and even governments are being pushed towards a digital focus that will likely endure beyond the immediate crisis towards what we call the next normal. As reforms are instituted to tackle the crisis, it is important to facilitate a favorable emergence for the payments industry, isn't it?
It is, Dana, and regulators, banks, insurance, governments, merchants, and payment operators need to adopt the regulatory policy measures and the latest business trends to encourage the shift to digital payments and facilitate the government-to-person payments. They need to be aware of the public and private sector commitment, the legal and regulatory framework, and the financial ICT infrastructure that George talked about. Moving forward, they need to avoid risks while embracing the digital payment transformation. And that is by building strong institutional, legal, and technical safeguards for data protection, for data privacy, and for security. They need to contain and monitor the cybersecurity risks and the AML-CFT concerns with solutions around the newly introduced limits for increased transactions. George, any thoughts?
Yes, sure. Technological innovation and payments are interconnected. Regulators, banks, insurance, government, and payment operators need to embrace an optimal digital payment transformation with technology like blockchain, biometrics, tier KYC, and analysis. They need to open up to the multiple payment instruments, accelerate the use of digital ID systems and biometric data for individual and SMEs to enhance crisis response and social support, then consult with FinTechs on transaction and payment product design, access points, awareness, and financial literacy, and large volume of recurrent payment streams.
Therefore, as a conclusion, we can say COVID-19 changed and will continue to change life and business as we know it, because COVID-19 uncertainty is still there on when it comes to the economic impacts, extent, and duration, and even digital payment transformation has already started, but COVID-19 imposed an acceleration and an obligation to go way faster than the normal process. Now, let's move to the questions. I think we will select a couple of them due to the time. I can see questions about latest biometrics and digital identity and even border security. Okay, let's start with the first question. I think it falls under your wings, Ziad.
Yeah.
How is the money transfer industry, like Western Union and MoneyGram, coping with the crisis? Ziad, if you can please elaborate on this topic.
Yeah, so it's about, how is the money transfer industry coping with the crisis, right?
Yes, like Western Union and MoneyGram, for example.
Oh, right. As we mentioned earlier, Dana, while established players such as Western Union and MoneyGram remain open for business, heading down to the brick and mortar office has become significantly less attractive during lockdown. Despite an upsurge in payment volumes, money transfer companies are facing difficulties in delivering payments. In some countries such as Argentina, Philippines, and Senegal, cash pickup facilities are closed, while in many other markets, opening hours have been cut back dramatically. That said, regulators are greenlighting innovations based on joined up thinking with financial institutions to help keep the money flowing. The International Chamber of Commerce, they've recently reported a rapid acceleration of digital solutions, such as the use of electronic signatures, blockchain-based solutions, and automated processing, and so on. We're mostly looking into mobile payment systems and digital wallets. With the SMEs in emerging economies, facing a serious liquidity crisis. So the International Chamber of Commerce is calling on governments to speed the shift to digital transformation, including payment of emergency business relief packages via non-cash means. To you, Dana.
Okay, thank you, Ziad. I have a question around digital KYC and identity. The question is, in time of COVID-19 and in the post-coronavirus world, why biometrics and how have they improved fraud detection and prevention? I think this is for you, George, because it's your field with biometrics.
Okay, so Dana, just to rephrase the question, why biometrics improve fraud detection and prevention? That's it?
Yes, concerning the digital KYC and digital identity in the time of the COVID-19 and even in the post-coronavirus world.
Okay. Biometrics have vastly improved fraud detection and prevention. For a post-coronavirus world, the technology holds immense promise for certifying identities securely and at a distance. A range of new biometric innovation are emerging around the world to help business and healthcare institutions tackle the effects of the COVID-19 pandemic. A facial recognition software is used in China. Efforts to tackle the pandemic are also being used in Japan, where technology providers have improved on their capabilities to use facial recognition technologies on consumers that are wearing face mask, as previously mentioned by Ziad. Digital transformation covers a lot of territory, but starting with identity verification makes practical sense as it enables modern companies to streamline the customer onboarding journey. Fingerprint scanning is undergoing its own difficulties because people report being afraid of touching buttons now, even the one of their personal smartphone. Virtually, no one seems to think that fingerprint biometrics will be a coronavirus casualty. However, count on the heavy investment to go towards contactless payment, biometric authentication, and a brave new world where it's harder to fake an identity or contract a deadly contagion. That's it.
Well, thank you, George. I think we have, in fact, good list of questions. This is why I'm going to extend to have two more additional ones. What's the story of EU signing contract for large-scale biometric database to enhance border security? I think, Ziad, this question is for you.
You know, Dana, just to make sure it's around the European Union, you know, recent contract on the large-scale biometric database, right?
Yes, the recent one concerning the enhancement of border security.
All right. Well, that was announced about a week now, I think. The European Union Agency for Operational Management of Large-Scale IT Systems has awarded a consortium, you know, of a contract for the delivery of a new shared biometric matching system, what they call the SBMS. And that is an important part of the entry and exit system. That's intended to pull together a database set to replace passport stamps and enhance border security in the European Union. The duration of the contract is, I think, 4 years, and which is extendable to 6 years. This new shared biometric matching system will be one of the largest biometric databases in the world, containing information for over 400 million third country nationals, including fingerprints and facial images. It'll also protect external borders on the long run, helping in the fight against irregular immigration and transborder crimes. To you, Dana.
Thank you, Ziad. Well, our final question is, how is payment shifting and how is fraud impacting digital commerce and online banking? This is related to you, George, to identify the impact of payment shifting on digital commerce.
Yes. Relatively speaking, Dana, e-commerce is booming. So to answer the question on how the payment is shifting, I need to mention that the adoption of online ordering of groceries, restaurant, health supplies, and other goods have increased dramatically. Consumers are expressing a broad desire for contactless payment in store, following the advice from health professionals. Conversely, the use of cash is declining to reduce physical interaction with paper money and cashiers. Now, fraud is surging in e-commerce and online banking, and security firms are recording a huge spike. Some attacks are disguised as legitimate correspondence from trusted organizations offering advice. In addition, that business have seen an early overnight shift in transaction volume online, and many of these don't have the defense in place to identify fraudulent transactions.
Okay, thank you, George. Well, we arrived to the end of our webinar. We hope that we were able to answer your inquiries. As for the rest of the questions not answered today, we will be answering them through your corresponding emails. Thank you again for joining us today, and thanks to George and Ziad. Stay tuned for upcoming webinars with VALOORES Business Academy. We'll be looking forward to see you again, and stay safe. Thank you.